Welcome to the Roaring Ages podcast. Today we're going to do Mikenomics, where I jump into the different news and numbers that I found interesting. So let's start with Portland new listings, and they dropped a lot this last week. They dropped harder than I expected to, and a week faster than it did last year. I have some charts at beavertonmike.com/state for state of the market, and a lot of these first charts will be on there if you want to play along. But last year, we went from 750 new listings in 7 days down to just under 500 with the Labor Day weekend. It just drops pretty fast. Then it shoots back up. Hopefully it does that here. The problem is we did not have the same bump we had versus last year. Like 2 weeks ago, middle of July, it kind of drops down, and it didn't do that same drop, but it also didn't do the same pop. So it's kind of interesting. If we follow, and we've kind of followed the line from last year, it's going to be super interesting. And basically, we do this pop, and then it just keeps going down for months until we get down to 250 listings or less. All right, next one is Beaverton pendings versus listings. So I'm in Beaverton, a suburb of Portland. I like to say Portland suburb of Beaverton because I like Beaverton so much. But we had a huge drop in listings. It's very, very remarkable, actually, how far we fell. We fell below where we were for the 4th of July weekend. So it's almost like it's a holiday weekend. I'm not sure what's going on, where this happened. It says it makes sense that Labor Day is going to be even worse. Something else that I've been tracking is the list versus sold price for Portland listings. And I do this every week. And right now, we peaked in late May, and we got to about 1.6 or so of the home selling over list price, and then it's just slowly gone down. We went a little bit under at the end of June, which is typical. Agents usually start overpricing because they see things going and they're seeing lagging data. And right now we're under list price for the sale of homes. So I think that's just going to continue to go. We started the year off about 1.8 under listing price. So I think that's just going to continue to get worse. Portland homes sold the first weekend. I started tracking this in May of last year, and we were around 35% of homes selling on the first weekend. The way that I judge that, or the data that I put in, is homes that were listed on Thursday and then went listing between Thursday and Saturday, and then go pending by Monday night at midnight. And we were at 35% last May, and it goes down fast. By July, we were down to 10%. It kind of went back up to 15% after the 4th of July weekend, held there, and then it started rising in the new year, and we got up to about 18%, and it kind of zigzags. We hit 31 for 2 weeks in March, late March. And then from there on, it's just kind of gone down. It's done a little zigzag. Right now, we are at 16%. Last week, we were at 13%. So this just shows that there is a softening market, obviously. They're not selling as fast. I think this is part like what I said on the other one, is that people are pricing a little aggressively, and they're starting to catch up. And I know that sellers have in their head of what they want to get, and sometimes agents aren't able to get them where they need to be on price. Portland active listings. We started the year with 3,000 active listings. Last year, I didn't start tracking this until middle or late January, and we were around 1,200 listings. So we started off really big. I thought that there was a chance that we would go much above where we were last year, but that did not hold true because the listings just weren't there. From that 3,000, active listings dropped for the first 2 months, then flattened, and then they started to go up. And I was like, okay, this is kind of keeping pace. That's going to be ahead. And then right when we hit the 4th of July weekend, they crossed. And now we're just a little bit under where we were last year. And I think it's going to continue to stay under. I see no reason that we have any relief that we're going to go over that. All right, so here's some interesting stats. That's what I'm showing on or putting up here is home builders. Insurance concerns somewhat slowing new home sales in Florida and California. And so in Northern California, 20% of sales, or the people surveyed said that sales were impacted by the lack of insurance. In Southern California, 29% of respondents said it was an impact, and in Florida, it's 32%. So with the wildfires and hurricanes, big environmental disasters, insurance companies have really raised prices. There's been issues with that, and that is really a big concern with people. Lumber prices, talked a lot about this in the last couple of years. We peaked out at around almost $1,700 per board foot. Honestly, I really don't know what this is, what a board foot is, but 1,000 board feet. It came back down to just kind of, but it's still, peak levels in 2018. We're below that. We're not back down to the norm. So it's sitting around $500, where I'd say the norm was somewhere around $350, $400, but it's come back down. So to be at $500 when it was at $1,600, $1,200 for a long time, that's pretty nice. It's at where it bottomed in late January 2021. So I don't see house prices coming down because of this. I think the builders ate a lot on it, and now they're finding a way to make profit off this. This is a problem. Like, remember when the airlines raised fuel prices a long time ago, and they didn't change it when fuel prices came down? This is just a place where people get their profit. Home ownership rate for households under 3,500. So the narrative has been that millennials don't buy, young people don't buy, and that's not true. We bottomed out at 34.5% in 2016 of people under the age of 35. Now we are at 39, and the peak has only been 43 back in 2004 when interest rates and the amount of mortgages that were bad and easy to get, that's how that got so high. To be at 39, that's only 3% lower. That's actually pretty good. So there's this huge narrative that younger people aren't buying, and it is absolutely not true. And most people are blown away by this stat when I talk about it. Total worth of U.S. real estate hit its 46.8 trillion, which is a ridiculous number. It was only somewhere around 23 trillion back in 2006 and 7 before the crash. And while this number is very large and can be scary because we jumped up really high, there's two ways that you can look at this graph. And I'll try to post this on my Instagram. But if you look at the graph where we were before the boom in 2008, if you take that and go straight across, it kind of puts us where we're at. Now, this feels artificial, and where we're at, it's hard to say that we deserve to be up this fast, and we know it's interest rate driven. And then you could take the trajectory that we are since 2012 and go up and kind of get a piece of just how far above that we are. If anyone's really truly believing this crash, I feel like it should come back to that line. But it's a crazy little thing. All right, so mortgage availability is actually problematic at the moment. So in 2016, 17, 18, 19, it kind of peaked after the crash. Before the 2008 crash, this index number is almost 900. Currently, it sits at 96.3. This graph is insane at how bad it was and how easy it was to get a mortgage. So a big thing that people worried about the crash is that we're going to have another mortgage meltdown or whatever. The problem is, or not the problem, but the thing that should help you feel better about is the people that are in the homes have good credit. And that's something I'll talk about in a minute, but there's so many pieces of paper that you have to qualify for a loan. These are not people that are going to be likely to default in the manner that was happening before. Before, if you could fog up a mirror, you got a loan. But this is also problematic, is that the banks are so tight that they've come down to almost record tightening on who can get a loan and what they're doing. So I've heard about some crazy programs that are out there, but I think that there's not as many as I thought there was, and it's not as scary that there's going to be this crash because of mortgage meltdown. So the mortgage availability index has to go up hopefully soon. The mortgage originations by credit score is still fantastic. There's almost no one that's getting a loan that's under 620. There are next to nothing there 620 to 660. Almost everyone has, I'd say 2/3 of people, or 70% of people are over 720, and 2/3 are over 760. And I think a lot of people understand credit scores so much more than they did in 2008. So many people are worried about it. So many people are trying to keep it in good condition. So that's fantastic. All right. And kind of going back to this, I have another chart that I'll try to remember to put on my Instagram. U.S. homeowner equity surges to over $30 trillion as value of housing stock past $43 trillion. Now, why I like this chart is it shows the homeowner's equity, but it also shows the mortgage of the debt outstanding. And that the debt outstanding is only a little bit above where it was in 2008. So there's this huge gap of people that can tap into it, that they can sell for, if things get tough, they can sell their house and they're not likely to be in a foreclosure situation. This is what everyone was trying to say back in 2020, 2021, is there's going to be this huge wave of foreclosures. And I just didn't see it. And some other people are listening to couldn't see it. It hasn't happened. And this equity, there's still demand. There's still demand, and that equity's there. If people had to sell, they would be able to. Now the question is, where would they rent? Where would they go? And that becomes its own issue. But that equity is there for the time being. And we are, 25. We're about double where we were at the peak of 2006. Obviously, that was then. And remember, that was with mortgage availability at almost 900, where we're now at 96. So it's just such better situation. And that is the majority of the stats. What I'm going to see for the rest of the year is August gets a little bit quiet. We're going to likely see another rush, and that's that listing work that I saw earlier on that chart, that there's going to be a lot more listings. There's going to be a push in September after Labor Day. And then once we hit October 15th, that's where it kind of stops. That's where people are going to kind of like, we're done for the season, at least in the Portland area. Every area is a little bit different. We get really muddy and rainy in the Portland area. That's kind of how the cycle is. And all the people who said they're waiting, come the first 2 weeks of January, they're back on the market. If you're wanting a deal, the prices usually slide, almost always, they slide from July to the end of December. The people who are selling during that November, December time are usually very motivated. They're not there just to have fun and try to sell a house. So the inventory is not going to be good. It's going to be really tight. You saw it was 3,000 homes at the beginning of this year. Last year, it was even worse the year before that. So you don't have the selections, but if you're not picky, this is where you can probably get a deal in a very difficult market. So until next time, talk to you later.